isn't just important to the user like me and you because they don't sell a certain object, right? Like it's something that for us to like buy and show off and promote, but their importance doesn't rely in the consumer base. What if it relies on the back end of them helping other companies that do sell to the consumer in order for them to perform the way they need? So they need them as their, like that's their source. You know what I'm saying? Like the plug to the plug in a sort in a way of looking at it. What
Right.
if
So
that's what makes them important?
so basically, ladies and gentlemen, what he's saying when we're talking about a company, right? So if a company is providing software, hardware for another company, they relying on another company, right? So what you said is it comes full circle. It goes back to what? Consumers, right? Consuming, right? So if the other company doesn't have consumer that's consuming, neither company what? Makes it. So everybody's relying on who? Consumer, no matter if it's at the small level, the middle level, or the higher level, we all are jockeying for what? Consumer what? Dollars. Got it? So I like the fact that they are selling software and to other major companies, but I also like the idea that they actually like to dig and dive on different fronts as well. So that was a great response. I like that. So Palantir, ladies and gentlemen, you guys are following us. I would like to look at Palantir on a 3-month time frame, then we can bring it all the way down, ladies and gentlemen. Now, Palantir has been on the market for a while now, ladies and gentlemen, for a while now. And I think a lot of people get confused on why this company is very important. A software platform, right? So as we move forward in the future and we evolve, everything is going to be AI driven, AI assisted, right? Your cell phone, payments, household goods, even chefs is going to be controlled by AI, right? Even I don't know if plumbing and electrician is going to have AI driven because you got to be able to think critical on the spot. But my thing is Palantir is one of those things and one of those companies that we all have to be what? Prepared to what? Invest in. If you guys look at from year to date, Palantir is up over 400% year to date, right? That's not year to date, over the last 12 months, right? Year to date is 46%. Where are you guys going to get this type of return on an investment? Where? Where are you guys going to get this turn on investment? Nowhere, right? So my thing is the best vehicle to is invest in is the best companies, right? I always say top 5. I know people said top 3. You still can make money for companies at 6, 7, and 8, but my thing is their growth might be a little bit slower, right? So you want to jump on a bandwagon when companies are performing well. So when companies are performing well, you want to take full what? Advantage. Now, if we look at Palantir on a 3-month time frame, ladies and gentlemen, we've been in nothing but a what? Uptrend. So the trajectory of this company, ladies and gentlemen, we topped out, right? All-time highs, right? That don't mean that a company is coming down immediately. Only time that a company comes down when they have forward guidance, and the forward guidance is not looking up, right? So they just smashed earnings expectations. So they beat EPS and they beat revenue. Me as an investor and you as an investor, you want to know if the company is healthy. So if the company is not healthy when it comes to revenue and EPS, guess what happens to the company? It falls. Can anybody explain to me why do a company sells off? Is it because of retail investors? Why do a company sells off? Why do a company plunge?
You say sell
It's,
off as in like the company sells itself?
why do the company falls, right? Why do the stock price falls?
Fear?
They're not reaching target prices. They're not bringing revenue.
Target prices not meeting revenues, but these are the big boys and the big girls on Wall Street. They are doing what? Selling off, right? Because my thing is we need to appeal to BlackRock, Vanguard, State Street, Chase, and big behemoths. Let's say Berkshire Hathaway, Aikman. My whole thing is if they're not appealing to these guys that's buying hundreds of millions, millions and millions and millions of dollars worth of share, that's mean this company is worthless. So my thing, if you're not attracting big investors inside your company, ladies and gentlemen, you only going to last for so long on Wall Street, right? Wall Street can replace you, right? We know that the top 7 companies right now, they can't be replaced and they might not never be replaced. My thing is they still need to appeal to what? Investors. So Palantir, if you guys look at on a 3-month time frame, we got a 222 continuation to the upside, ladies and gentlemen. We've been nothing but what? Bullish, right? So investment on the low end was $5.92 a share. Currently today, we hit over $110 a share. That's a crazy return on your investment, ladies and gentlemen. I don't care if you have 1 share, 10 shares, of a million shares. These are the type of investments that you want to make. Now, for us as investors, once we see a stock that's in a complete uptrend, we're looking to ride what? Momentum when we come to trading what? Options. Can anybody explain to me, all right, in layman's term, why is it beneficial for you to have shares and beneficial for you to trade options? In layman's term, why do you think that is beneficial to you?
The
Yeah.
options you, oh, I say the options you can make quick money, and shares, you can always hold on to that for a long period of time. In case the company starts paying out dividends, you have the shares, and also if they do a stock split.
So basically, what Court just said is if you hold shares, you're looking to make money on a long-term investment as the stock continue to keep on going to the upside. So that means you had to get a quality what? Entry point, right? So price point matters. Dollar cost average matter. Company metrics matter. But in the option world, ladies and gentlemen, we are investing into an uptrend or into a downtrend. Now, so in the option world, we have something that's called Greeks. And we can get into that, ladies and gentlemen, another time, but that's how we make money. Now, if we look at Palantir, right? PLTR on the monthly time frame, you guys notice anything? We had a 2-2 continuation, then we got hit with a 3-bar. Can anybody explain to me what do a 3 means on a candle in the strat world? What do a 3 mean?
Takes out both the high and low.
So it takes out both the high and lows of the previous candle, right? So we notice, all right, on the monthly time frame of December, right? In December, we had a low of 66, and then in January, we came out and went all the way down to what? 63. So guess what happened? The January candlestick took out the high and the low of the December candlestick, right? Which was the high of 84, and then the February candlestick took out the high of what? January candlestick at $85. So this was a great investment. This is almost a $30 move to the upside, especially on option contracts, and it's also a brilliant move when it comes to long-term investment on shares.
I'm sorry, you just lost me, Coach. I'm not gonna lie. So what I'm looking at right now is this. You said you're talking about the 2-3-2. I'm looking at
right.
the end, right?
So look at this. So we got a 2-3-2, right?
All right. That first 2. What month is that? That's January, right?
That's December.
December.
This is January, and this is February.
Okay.
All right. So we got a 2. Right? That means when the January candlestick, we wick down. But remember, I told you guys about wick theory, right? If they really wanted to push this down, they would have joined with a what? A body, right? The banks would have came in and pushed momentum to the downside. But guess what? It took out the low of December. Banks came in and bought it up, and we took out the high of December. And then the candlestick in February, we only 6 days in February. The candlestick came out and took the high of December in January, and we catapulted almost $30.
Okay, I see what you're saying. So you're basically looking at that thin line, saying that was the furthest it went down, was the little thin line on 3.
Yeah, the wick.
And they shot it up.
Right. So wick theory. So let me explain to you what wick theory is, right? So think about investing, right? So if you was buying something, right, you want to buy it at the cheapest price possible, right? So what the banks like to do is they like to come in, right? They say, oh, wow, we got retail investors. They in here. They want to take out your stops because you're like, oh, I'm shaking. I don't want to lose $300. So guess what? They know that you set your stop, right? Then they hit you with this wick, kick you out your stop, even though that you went calls to the upside, right? Mm-hmm. Kick you out here, and then eventually they go out to all of your what? Take out all your profit targets. And then now you're shaking your head like, oh, instead of losing 300, you could have made 30,000. So
it's like a pump fakes to get you out the way type of situation.
It's always right. So you got to understand how retail investors work. They want not retail investors, institutional investors work. They want to take money from retail investors, so they have the best tools in the world. And remember, they're trading on a microsecond, right? We can trade on a 5 second, the 1 second, the 15, the 30 second. But my whole thing is we don't have the bag that they have, right? Do you have $30 million, 10 million, 5 million, 50 million? Right, $100 million. So my whole thing is your best bet is to stick with a percentage that you are willing to actually invest and willing to actually lose. I never tell anybody to full port their account. Now, on a trade like this, the wick theory came in. It came down, kicked out all the stops, because guess what somebody said? My stop is going to be at the low of what? December. Got it? So they kick you out of all your trades. It did come down, and then guess what happened? It bounced. And it took out the high of December, And then February came out, took at the high in December and January. And guess what? The rest is what? History.
I'm sorry if
Got
I'm
it?
talking too much, but
No,
I
you good.
apologize to
Ask
everybody.
questions.
This is where I get killed at. So you're literally covering where I get killed at because I'm not gonna lie, you showing it to me, I'm like, my mind is blowing up because this is exactly what happens to me every time. Is the wicked go low,
Yep.
lower than what I want to, what I want to, lower
What
than
you
what I'm
willing
willing
to
to
lose?
lose, and I jump out and then it shoots up and I watch it skyrocket. So how do you prevent that? Is what I'm trying to figure out.
All right, so what I like to do, right, is a combination of things, right? It depends on what I'm trading. An individual stock, I'm willing to lose 20%, 30%, depends on the movement and the volume and the volatility of the stock. Now, something on Tesla, I'm willing to lose 25, 30%. Because I know Tesla is very what?
Volatile.
Volatile, right? So my thing, if I only set a 10% stop, right, on Tesla, it'll kick me out of my 10% and then go up 50%, right? So I say, you know what, I'm willing to lose 25 to 30%, right? And on a given day, Tesla will take 30% from you, right? But my
Correct.
whole thing is if I still like the direction and my entry point, once it breaks it again to the upside or to the downside, I get back in and I'm willing to lose another 20 to 30%. But let's say it goes in my direction this time and I make 100%. So I'd have made up for the 25 or the 30% loss,
So
right?
basically, it's knowing how much you're willing to give that stock to before it correct itself.
Right.
And how
Knowing
do you
how much, no, not to cut you off, knowing how much you want to give and also packing a punch because I notice you are right on a lot of your trades, but you don't pack a punch.
exactly?
Right.
You're killing me all
You
week.
win. I would rather you win 30% of your trades at 5,000 each, right? And then you lose 70% of your trades at $50 each. You still will walk out what? In profit.
Winning.
The people on Wall Street are not 100% and 50% accurate, ladies and gentlemen. I know people on Wall Street that actually make out pretty good only willing 30% of their trades. Because the 30% of their trades that they'll win, they're packing a punch. Right? Can you imagine putting up $100 million and you're trading shares on Apple and Apple goes up 100% for the year? You made 100 million, right? And let's say your next 20 trades for the year, you lose 1 million a trade. You still walk away with 80 million. So that's a win. That's a recipe for winning. So you got to pack more contracts, make sure you control your stop loss, and make sure that you understand what you're trading. A lot of these traders online, they don't understand the specs and the metrics. They don't understand the fundamentals of a company. They just want to trade it because, oh, the chart is telling me to trade it. No. You got to compare specs. You got to compare everything, right? Fundamentals moves the candles. Candle doesn't move the fundamentals. And this is what I've been explaining to people for years. Candlesticks is moving off of information, right? EPS, earnings and revenues, right? News, right? My thing is, you never seen a news move off a candlestick. Have you ever seen that? Have you ever seen a candlestick move and the news come out? No, the
Never.
news come out first and then the candlestick what? Moves second. Right? So it's secondary, right? So mastering both of those, you put them together, guess what you get? You got mashed potatoes and gravy. Right? It's a hit. So my whole thing is now we look out on a monthly time frame like I showed you. We got that wick. So remember, you put in calls, it went up, is moving. You said, wow, I'm killing it. And you said, I got a stop loss below December low. You see how they wicked and kick you out that trade, and then that trend continued back up to the what? Upside. So now you're sitting there like, wow, only if I would have put my stop loss a little bit lower, I would have been able to take full advantage of a what? 60, almost a 60-cent move, $60 move. So my thing is when you swing at things like this, I want you to think like this too, bro. How long this trend has been in an uptrend? 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, 7 months. So what I'm trying to explain to you is no point in you doing weekly contracts. You need to do monthly or quarterly contracts because this thing's been in an uptrend for what? Months out of what? Months out of time. So you want to give yourself time to actually allow the trade to what? Materialize. Right? So think about a cell phone company, right? You pay your bill, right? Every month, right? You're giving yourself 30 days to pay your what? Cell phone bill. So in the stock market, you want to give yourself time to make what? Money. Now, let's get into the meat and potatoes. I want you guys to look at this, right? If you guys are following me on YouTube, right? Because we do a lot of trade based off of the weekly time frame. Now, you notice we got pretty much a shooter, right? It's like a doji. All right. So my whole thing is let's talk about this for a second, ladies and gentlemen. Can anybody tell me what is going on right here? Can anybody tell me what is going on right here? Talk to me. What's going on?
Consolidation.
Consolidation, right? So consolidation is we not making no high, new highs or no new what? New lows. We're trading inside of a what? A range. So the weekly time frame, we've been trading inside of a range, right? Since last earnings, we popped. We trade inside of a range. Now, remember I talked about catalysm, right? And then I talk about fundamentals. What got this trade out of this range? Can anybody explain to me what happened this week to get this trade out of this range? What moved the candlesticks out of this range this week? What happened? Did the CEO get fired? Did they hire a new CEO? Did they have a new product? Did they have earnings?
Was it earnings?
Earnings report. So did earnings move the candle or the candles move the earnings? Which one?
The earnings moved the candle.
So guess what you're waiting on? You always waiting on catalysts, right? So catalyst is gonna move the specs either negative or positive, right? Because we've been consolidating for a while since last what? Earnings. So you're waiting on these moves. So that's why you have to dig, and make sure what you're digging that it lines up with what you see on the charts. So a positive move, we broke. Now I want you guys to look at this. If we're trading inside of this range, what will be your trade? What will be your entry point? Anybody? What will be your entry point? These two highs. Y'all see those are pretty much equal what? Equal what? Equal highs.
Equal highs.
So once we broke above 85.34, you should have been in nothing but what? Calls. And what strike price did I give you guys? $100 what? $100 call. $90 call. Bag drop.
So you like to catch your entry point at the high end and not when you know it's gonna bounce, because this was a strategy I first learned when I was teaching myself how to trade. I was self-taught till I got coached. I was watching where I see the I would say not the resistance, the support. When I seen it bounce off the support more than one time for confirmation and shoot up, the next time it would bounce on the support, I would take the call because I know it's gonna go and eventually break the resistance. And that was working for me for a while. So you don't like watching it on the resistance. You like watching it on the upside, you don't like watching it on the support. You like watching it on the resistance.
Both. So resistance and support works, right? With a few other tools we added in that, right? So now I want you to see something. Now, one of the clients just said, hey, you like to trade off resistance because we hit resistance multiple times. I know this is a higher what level, right? Got that? Nice seeing you, man. I'm good. So look at it from this point of view. If we have a ceiling in our house, right? Y'all ready? This is resistance. If it rains, if you don't have a ceiling, what happens to all your interior?
Get ruined.
So in the stock market, if we keep hitting resistance, what is this telling us about the institutions?
That's where they're selling at.
This is the selling pressure, right? So if they don't sell here, guess what happens, ladies and gentlemen? Or a retail investor doesn't sell here, it rains on you.
Correct.
Because guess what happened? If we hit resistance and we keep dropping, you're going to lose all your what? Premium if you're trading options. So what you need to wait for is you need to see a hard buy or hard sell at support. What you notice here, every time we get to the top, we got a major what? Sell. If we get a major sales in the millions of dollars, we create something that's called a what? What do we create? Anybody have it? What do we create?
Would that be a dip?
Highs.
Let's talk about it. What do y'all think that we create? Anybody? Any ideas?
Say the question again.
So if you guys continue to keep on seeing that we keep hitting a level of resistance, and then you guys see a major sell, what is this creating? An order block.
Okay.
Right? Why is an order block created? Right? Because I'm gonna give you guys an example. Let's talk about this. We hit tonight. Y'all ready? Let's say this first candle is $10 million in sales. The second candle is $2 million in sales to the upside, right? So 10 and 2, that's 12 million, right? Y'all got it? 10 and 2 is 12, right? So we got 12 million sales to the upside, right? 12 million, and then we get a $30 million sale to the downside. That created an order block to the what? Downside, because the bears came in and trumped the what? The bulls. And that's how order blocks is created. Ladies and gentlemen, there's a lot of buying pressure or a lot of selling pressure. Right? So once you guys start seeing these order blocks form, you say, wow, what is going on here? Is the banks buying or the banks selling, right? And you can clearly see that the banks start selling. And what happened here, ladies and gentlemen, y'all ready? We got a $30 million order block. We got a $15 million order block here, and then we got another $15 million order block. Banks came in. That's a $30 million. So guess what happened? Look at the body. We got equilibrium. So now we got an even what? An even buy. So we looking at the next what? The next candle came out with $15 million more buying. So guess what? The trend change, right? Is a change of character. So now we know that we got a higher probability to break what? Previous what? Resistance. Y'all see how that works? So order block, the money came in from the downside, right? Banks bought 15, 15, 15. That's 45. So now these three candlesticks is actually going to engulf that $130 million candlestick. So we know this order block was created to the upside. So momentum is shifting from the bears to the what? Bulls. And then what happened on the time frame? Earnings came out. We took out $20 candlestick. That's what we call a Miraboji. Got it?
I got one more question. I'm sorry. Like I said, I apologize.
Ask him all night. We here. This study hall. Everybody got questions.
So this right here is, like I said, I be trading a lot, even like fake trades. So I had a homegirl that used to trade, and she would tell me the same thing about when these banks are buying in or selling. Where do I go to look for that? Because that's what I feel like I need to see in order to be able to tell where the stock is trending. Like you just said, I need to know where the banks is buying at, because that's really who controls the movement in the market. If I'm not
banks
mistaken.
control. They're the one that control the market. They own over 91% of the shares. The top 1% in America owns. The top 10% in America own 90% of the shares, right? So the shares move options, right? Because at the end of the day, you have to borrow shares, right? Because each contract is 100 shares to sell options, right? Now, I want you to think about this psychologically, right? You said, where's the banks buying in at? All right, let's use a little let's use a little common sense here, right? My kids say, "Oh, Daddy, you ain't got common sense." Yes, I do. Watch this. Now, if I'm looking at candles, right, no indicators, no anything, how would I know who's buying and how I know who is selling? About the size of the candle. If I see a major candlestick to the downside, I know the bears is what? Shorting it. If I see a major candlestick to the upside, I know the bulls is going what? Going long. So candlesticks is telling you a story. It don't have to have the 1, the 2, or the 3 number on it. Candlesticks is actually telling you a story, ladies and gentlemen. Hey, banks are buying, right? Look at the body, the size of the candlestick. That's why I do not like wicks, because the wicks is showing me that is a higher probability for a reversal, right? Because if I got a major body to the upside and I get a wick for a $5 wick, I know this is the ceiling. This is a higher probability for a reversal to the downside. So let's go. You ready? Banks is selling. Banks are buying. Banks is coming in based off the size of the candlestick. But you can also use multiple what? Indicators. You ready? Indicator that I use, that I've been using for years, ladies and gentlemen. Y'all want to know what it is? Put it in the chat. Put it in the chat, ladies and gentlemen. Drop a world emoji in the chat. I'm going to give you guys to it. Drop some world emojis in the chat, ladies and gentlemen. If you guys on Google Meets, YouTube, and you guys on IG, drop a world emoji in the chat. I'm going to give you guys the indicator. All right? Drop a world emoji, because this is very important that you guys use it so you guys can see when the banks is coming in, right? And my thing is, this shows you in layers, right? Drop a world emoji. Let's work. It's important. Now, I know a lot of people use, they say indicators don't work, indicators don't do this. That's cap online. Big boys and big girls on Wall Street use indicators, right? They use EMAs, they use all this, and they making millions and billions, right? So drop a world emoji, ladies and gentlemen. Let's rock and roll. All right, now, I got something that's called IOBP, right? So it's called Institution Order Block Pressure. I didn't create it. I didn't make it. I've been utilizing. I tweak it to my liking. So it's basically letting me know institution order block pressure. So it's letting me know if the pressure is coming to buying and the pressure is coming to what? Sell. So I'm going to pull it up. Mine is already catered here. I'm going to type in IOBP. Y'all got it? What it say? Institution what? Order block pressure, right? Now, institution order block pressure, the way that they got it, is going to show you pivots. It's going to show you bullish. It's going to show you bearish. I don't like the way that looks. So I went in and I tweaked it, right? And I'm going to show you guys how mine look, right? I'm going to get rid of this. Now, I'm going to turn mine off. It's off. I'm going to turn it on. I want you guys to look close when I turn it back on. What you guys see? Arrows, right? Bearish arrows, bullish arrows. bearish and bullish. Got it? Bearish and bullish. So my thing is these arrows are showing me when the banks are selling and when the banks are what? Buying.
Buying.
It's that simple, ladies and gentlemen. Simplicity is the key. Now watch this. The banks like to buy on threes and what? Sell threes. Y'all follow me? Now, we know that the bank sold here on a 3. They didn't buy on the 3, right? Because this is weekly. We would have seen it, right? But if we go to multiple time frames, what do you guys start seeing? A lot of what? Consolidation, a lot of breakouts. All right, let's go to the monthly. You guys notice anything? Nothing, right? 6 months, you guys notice anything, right? But now, what if I drop this down to a smaller time frame? Let's rock. We're going to go to the 90-minute. And my brother that be asking all the questions, you ready for this? I'm going to give you a gem. Every morning you should watch this. This is a bag drop. You'll never forget this. All right, pre-market. You got to have your extended hours on, right? You ready? All right, this is Monday. You see that? Earnings. Miraboji calendar, right? Boom. Went what? Went crazy. All right, now what about today? What did I tell you? The banks like to buy on what?
On threes.
Oh, if the banks like to buy on threes, that means they like to what? Sell on threes. You ready? All right. You see this candlestick here? This is say 7 o'clock. This say what? 8:30. What did the banks do this morning before the market opened?
They bought.
Oh, so if the banks came in and bought at 8:30, that means they bought what? What did they buy? They couldn't buy options. They bought shares. So if they was feeling bullish, you know that you need to be paying close attention to the 15-minute candle from 9:15, right? And what you're looking for at the break. Pre-market what?
Movement.
Pre-market high. Once you break pre-market high, if you've seen the banks come in, right? This is bullish indicator that we're going to continue this trend to the what?
To the upside. So
Now,
I'm taking notes. Let me repeat this, Coach. So what you're saying is every morning before the market open, because then again, I apologize to everybody, is I should be looking at the 90-minute chart and looking at it from the 90-minute and 15-minute to see where the banks are buying in and selling at.
All right, I'm gonna give you a game. You ready? Follow me. All right, 90-minute time frame. You ready? You got it? That means we got the 7 o'clock candle, the 8:30. Once the 10 o'clock candle comes out above the 8:30 candlestick and we are bullish or bearish, you should take that what? That trade. You see how the 10 o'clock candlestick, the body, not the wick. Once the body of the 10 o'clock comes above the 8:30 wick here, you should take nothing but what? Call. So once you broke above 1.58, you should take 110s and 115s. And guess what happened? We should be looking to the left of our previous what? High. A 106 what? 95. You see how we eclipsed that?
Okay.
Bag drop. Right? That's the 90-minute. Now watch this. We're going to mark it up together. Y'all ready, ladies and gentlemen? 7 o'clock, 8:30. We're going to mark the top of our 8:30 and we're going to label this what? Call. Entry. Got it? Watch this. Remember we talked about institution order blocks, right? Can anybody explain that to me? Put it in the chat. What is institution order block?
Large orders from the banks.
Large orders from the bank, ladies and gentlemen. Large orders from the banks. Y'all ready? Large orders from the bank. Y'all got it? Watch this. Y'all ready? Let's rock. I want to show y'all this. This is how you're going to get paid. You just got to be patient in your pursuit of becoming a better trader. And my whole thing is see something, say something. Basically what I'm saying, if you see something and you inside of a group, share it. Sharing is caring. Don't be the only one dropping the bag. Got it? That's our call entry. But guess what else I want to mark? You ready? Give everybody your name so everybody can know. Wish, give them your name.
I say for that.
No,
for
what's
that,
your
for
name? No, give me
Wish,
your name.
Wish.
All right, Wish. He want to be called Wish. Watch this, Wish. You're gonna learn something. Simplicity wins the game. We ain't gotta have all these fair value gaps and all that, but we can study them. Watch this. 7 o'clock, 8:30. Once the 10 o'clock candle comes out, but I want to mark. Guess what? We got a 3. Banks like to buy on what?
3.
And they like to sell on 3. So guess what we gonna mark right here, y'all?
The next 3.
Nuh-uh. What we gonna mark?
Oh, we're gonna make the banks. Okay.
Banks came what? Came in. So if the banks came in, right here, ladies and gentlemen, guess what? If we go below that, I know I need to what?
Sell
Short
because
it,
the
short
banks,
it.
because the banks getting out.
All right, banks came in, call entry, and then guess what I need to mark? Highs. Watch this. This is gonna be my first what? First exit. So if I go super heavy, 100 contracts, this is my first what?
First exit.
First exit. You ready? Remember I
It's a
told
safe
you the
exit.
15-minute candle. You ready?
I'm watching.
What do you see? Let's go to this 15-minute candle. You got it?
They sold at your first exit.
Look at this. Now 15. So if we're not doing the 90-minute candle, we're doing the first 15-minute what? Candle. Once we broke above 101.14, we should have been in this trade from the what? From the y'all follow me? From the what? From the bill.
Okay.
Guess what's our first target if we take the 15-minute? There we go. 102.95. What's our next target? 103.62. What's our next target? 105.98. What's our next target? 106.95. Straight bag drop. Now, pay close attention. This is how they're going to chop you. Y'all see this consolidation?
Right.
You ready, Wish? Excuse my French, ladies and gentlemen. Who gives a fuck? You got
Okay.
in at 101.14. If you got in at the 90-minute, 105, right? Why you care if it's chopping right here? It's still at 107. Your trades are safe.
Okay.
You shouldn't be dumping these trades unless you met your quota. Got it?
Gotcha.
Chop. And guess what happened? Once you seen that we went up here and had created a resistance and we banked by the above, you should have added to your what?
To your position.
And then guess what? Now you got a double bubble. You know what that means? Extra money.
Bad drop.
Got it? Now, let's talk about this in totality on the 15-minute, right? We're going to drop it to the 90. I want to show you guys something because I think that people fail to realize this is simplicity. All right, on a 90-minute time frame, y'all notice anything? We got what? Resistance. We got what?
Support.
And then what did we create? A cup, what?
Cup and handle.
Bull
So
flag.
guess what this means? Cup and handle. You ready? Now,
And a
if
bull
we get,
flag.
yep. And now, if we get a rejection here, what's our targets coming down?
Previous price.
Previous price points. All right, now watch this. You ready, Wiz? We got a cup and handle. We know this is what? Resistance. So once we broke resistance, Wiz, right? This is from what? Yesterday, Tuesday. Once we broke the high from Tuesday, we should have been in this trade going what?
Going to the upside.
All right, watch this. Bullish opportunity. We rolling, right? Now I want you guys to pay close attention. We got breaker support here. All right, 108. So we know we should be looking tomorrow. If we break 108 to the downside, we should be taking this trade back to previous what?
Previous
Resistance.
lows. Okay.
Once we break previous resistance, guess what? We should be taking this trade back down to previous what? Support.
Okay.
Got it? Now, Wiz, let's look at these candles. I like the chart on the 12-hour candlestick, Wiz. I'm going to give you some game. You ready?
Right.
All right, you see BOS? That's break of structure. Once we broke above BOS break of structure, that's the top of this week. We should have took nothing but what? Calls. Now, I don't need BOS down here because BOS is all the way down here because we was chopped. If we break this, we know the trend is completely what? Bearish.
Upside.
All right. Now, you see this two continuation? Then we did it inside. Guess what? I'm looking at the bottom of this wick. So if we break here, my target is $97.
Okay.
Right? Now, what did I tell you? The banks like to buy on what?
Threes.
So the banks bought on threes, and then they push it all the way back to these highs, and then we create a new all-time what?
All-time highs.
There you go. Got it?
Gotcha.
Now, look at this. People say, oh, you can't make money. I'm going to show you something. We're going to switch it to the 4-hour time frame. Y'all notice anything on the 4-hour time frame? What time this say? This is Monday. The banks came in after the bill, right? They hit you with the boom because we was already in calls from earnings, right?
Mm-hmm.
Right? And then guess what else happened? We consolidated, right? Y'all see that? I got a question for you guys. Y'all notice y'all see anything odd and strange on this? Y'all see anything odd and strange on this? If you guys follow me on YouTube, see anything odd and strange? We never broke price point, right? We never broke below support of this one candle. So we still should have been in this what?
In the call.
All right. And then guess what happened? Created a new all-time high. This is how you make money. All right. Now that's Palantir. Now, let's go. Let's talk, ladies and gentlemen. All right. Now I want you guys to think about one or two things. I'm going to tell you guys this. To be profitable, you have to be patient, positive, and what? Persistent. All right. Y'all ready for this? Please let me know you guys ready for this. Is a weekly pick, and I don't want to hear no excuses from nobody in the group. If you didn't took this trade, especially if you had capital, you missed out on a bag. All right, Lila Lily, LLY, y'all ready? All right, 3-month time frame. I want you guys to notice something, right? Anything y'all notice? We got a 2-2-2. Then we got a 2-1. So 1, Wills, you ready?
Yeah, I'm here.
All right, we inside. So that means we didn't break the high or we didn't break the what?
Low.
Low. So that means we consolidate what?
Stop.
All right. Now watch this, Wiz. Remember we talked about wick theory, ladies and gentlemen? This is important. Y'all see how we got this wick on this hammer? If they really wanted to complete this trend to the upside, it would have been a what? A body. So we did get a body. We got a rejection at 970.92, right? So what should be our targets? Y'all ready? We're going to add a little bit of sauce in here. All right. We're going to grab our field retracement, right? See the top of this 2, this fell 2 up?
Right.
All right. We're going to draw it down to the bottom. If we're using a 50% field, what should be our entry to the downside? 50 what? 857, right? If we get in at 857, y'all ready? Remember, this is what candle is this? This is what? What candle is this, y'all? This is July. Once we broke 857, we already had our entry. We should have been prepared no matter what time frame is on. Y'all got it? If we're using a 50%er. Let me know if you guys will follow me.
I wasn't here for wick theory. I see you talk about it a lot. I'm trying to understand that candle you talking about. That's not a hammer, a handle candle, a hammer candle.
It is. But if they really wanted to push the trend and keep it bullish, it would have never formed the wick. It would have been a hard, solid body with nothing but banks buying, institutions.
Okay. So when I see a candle like this, I should expect a bearish.
You should expect a reversal into down to the opposite side because I'm going to show you. Ready? Now, we drew our field. We got our 50%, right? Y'all see our entry? 50%. See it? Let me know if you guys are following. That's our entry for put to the downside. So no matter what time frame is on, we're going to label this up. Y'all ready?
Okay.
Remember, you can't catch them all, but you make sure you plot your entries and your targets. We got our put entry. Y'all ready? This is on a 3-month. All right. We failed to continue that trend. We got our 50%. Once we broke below this, y'all ready? We're going to drop it to the monthly time frame. Y'all see our entry? When should we have got in this trade, ladies and gentlemen? Can anybody tell me? It looks very choppy, right?
Right.
We should have gotten this trade in what? What they say? October. Once we broke in October, you see how low we went? 708. You would have had a bag drop over 120 points.
That's what you're saying.
Y'all got it? A bag drop. Now, pay close attention. If you got in this trade, right? Once we broke below here October, what should be your stop loss? Anybody have an idea?
No,
your
sir.
Entry. Your entry. Or 10%, 20%, 30%. Once it goes back above your previous entry, you should not be in that what?
That trade.
Voila. Got it? Voila. Ready? Now, that's on a monthly. You ready, Wiz?
I'm here.
Look on a weekly. What's our entry, Wiz? Here, below this candle, we came all the way down here to 748. That's a bag drop. You shouldn't let it go back up. You ready, Wiz? This is still our same entry. You ready? Because that's off the 3-month time frame. See how we went up and went back to resistance, created a new high? Got it, Wiz?
I'm here.
Once we came back down and broke back down again, we should have got back in this what?
In his call, because we know it's going to go back up, right?
Now, you ready? Once again, I gave you guys weekly picks. What should be our entry point to go back up to the upside if we basing it off the 3-month? Once we broke back above that same what?
That same level we picked the first time.
So now your put entry turns into your what? Call entry. You got it? 832, and then what we top out today at? 87. So you see why I said $900 what? Call.
So do you always chart like that on a 3 month? Because that's one of the questions that I be having right there.
I try on 12-month, 3 month. It depends on how long I'm swinging. Because guess what? More information is better, right? But if I'm scalping, there's no point in me going to the 12-month.
Okay.
So if I wanted to scalp this, right, I'm going to the what? 90-minute. You ready? I'm looking on the 90-minute. I want to see what it's doing in pre-market. I'm like, damn, it's very choppy, right? 4 o'clock. I noticed right at 4 o'clock, but then I noticed at 5:30, the banks came in and did what? Why is the banks buying at 5:30? They must have what? Earnings. They must think earnings is going to be what? Spectacular.
Positive. Okay.
Boom. They beat EPS. They beat revenue. Banks came in at what time? What time did the banks come in?
5:30.
5:30. You see how we wicked up? And then we wicked down. The banks didn't lose no money because they got in at 8.17. Even though we wicked back down to 8.27, the banks are still in what? $10 profit per what?
For sure.
And then guess what happened after that? Y'all ready to rock and roll? Remember
I'm
I told
ready.
you, 90-minute candlesticks is your friend. 7 o'clock, 8:30. Once the 10 o'clock body came out above the 8:30 candlestick at 66, you got a whole what? $21 move.
So just for clarification, like I said, I might be repeating myself. If I'm charting to scalp, like I like to do, I like to do options and day trades. Mainly, I don't really swing right now. I want to live on a 90-minute to see what's going on. Do you ever trade on a 5-minute and a 30-minute?
I trade on a second. You ready? I'll rock and roll with you. We're gonna go down to your level. So 90-minute, I'm looking for my entry, right?
Correct.
I got my entry 90. If we going bullish or we going what?
Bearish.
Got it? In this instant, this is our what? 7, it's our 8:30. So we came above. So we took what?
To calls.
Now watch this. I wouldn't take puts below this wick. I would take puts below this what? Body. Y'all ready for this? Get your gem. Not when the wick closed below the body. It's when a body be closed below another what?
Another
Body.
wick. Okay.
Y'all got it? Because I want to make sure that the banks is in full force to the opposite what?
Opposite side.
Direction. So guess what? You would have got in here, right? You see this wick? 58. If you're not scalping on a smaller time frame, you would have got what?
Crushed.
Field. So guess what? Boom. And then it went all the way up from where? 46 all the way to what? 87. 41-point move. Your contracts is dead on arrival. No point of CPR. Ain't bringing it back to life. It's a wrap for you. All right. You ready, Wiz?
Yeah.
I'm going to delete all these and I'm just going to leave one. All right. 7:30, 7 o'clock, 8:30. This is our entry for calls, right? We're going to change this candlestick. We're going to change it to yellow. We're going to switch to the 15-minute breakout. You ready?
What number is that? It's hard to see on your screen.
15-minute time frame.
I'm talking about the price, the price.
867.10. Got it?
Got it.
All right, you ready? 15-minute candlestick. You ready? This is how you can get a better trade.
Got
You see this 15-minute candlestick right here?
Yeah.
836.51. Once we broke out, we know that our target is what? The 830 candlestick.
Right.
So we could take 870s, right? Calls.
Hold on. Is the 870 called the bottom line or the top line?
Nope. 836 is the 15. 835 is below above the 15-minute candlestick, right? Which was a 1. We was inside, right? That's the 915 candle. You got it? I'm gonna circle it. The 915 candle. See it?
Okay, I see it now. So that's 915.
All right. So once we broke that 915, if I say something from the bell, I already seen that the pre-market is showing me what? Favorable what?
Favorable calls or bear, whichever one you already noticed where it's going.
They beat earnest. I seen that the banks came in, right? Banks is not coming in here for no reason, right?
Oh, so you know the bank's gonna keep coming in at the bottom and it's gonna have to go to the upside. I see what you're saying.
Right. Now, if the 15-minute comes and I seen the banks was shorting it, guess what I would do? I would short it below the 15-minute here, 828, and I would take it back down to 816. Right? You ready? Banks came in, we know that. We pushed it up, right? What's our first target? Remember, we marked it in pre-market on a 90-minute above the 830 what? Candle. That's our first target. So guess what? That could be our first and our what? Final target. 836, 867. That's a 30-point move. Bag drop. Get close to the money. $30 out of the money. Now you'd have made 500, 600% trade. Now, where you know where the exit is at, Wiz? You got in here. It went up to all-time high, right? Well, pretty much not all-time high. It went up to a daily high, right? You know that you can exit here, but let's say you want to stay in this trade. You said, oh, well, it's coming down. Not necessarily coming down. It's in a chop fest. You got in down here. So why are you worried about if it come in?
I'm not. I'm gonna let it do it. I'm gonna let it do its thing until it breaks below that line.
All right, now here we go. Give you another opportunity. Support. You ready?
Mm-hmm.
Resistance, cup, and what?
Handle.
So we know we in a bullish what?
In a bullish trend.
So how can we lose? Talk to me,
Dang.
Wiz.
Only if we make we want to lose, really. Only if we want to lose.
You know what? Only trades that I'm a majority get clapped on is swing trades. If I have the ability to watch the trade, interact with the trade, I'm not losing.
It's funny you say that. That's why I'm not really too much of a fan of swing trades, because
now that's my thing. That's my thing. Now, don't get me wrong. It's my favorite attribute of trading. It's swing trading. But I can't control what earnings and news do after the bill.
That's why I don't like it. Right, you just said right there is exactly why I don't like it. It's too unpredictable after the bell.
Too unpredictable. Because guess what? If you do have earnings, you got, like I said, EPS, revenue, and forward guidance, right? All right, let's talk about Eli Lilly. Let's move on from there. Let's talk about Amazon. Amazon did it again. Killed everybody contracts. Killed everybody contracts. Y'all follow me?
Yeah, we hear.
All right, watch this. I told you guys in the group we got an implied move of 17 what?
$17.
And then what did we go down?
$17.
There we go. Now watch how this works, y'all. We got an implied move of $17. We hit it on the head. Y'all ready for this? Remember I told you quarterly time frame. Amazon is going straight, but a what? Uptrend.
Mhm.
Amazon been here before. Y'all see that this is what? Resistance. Amazon been here before. And then we hit what? Support. So my thing is we all shop at Amazon. Everybody got Prime coming up to their house. You know, people got wives, husbands, kids, aunties, grandma. So I want you guys to look at this. Amazon had a fail 2 down at $81. Opportunity to buy. Look at the year. 2022, you could have did leaps for 3 years, 3 years out, 2 years out for $100 strike price or 200. You see how we had previous resistance at 188? Y'all see how price have memory? It always like to come back to previous what? Previous
Prices.
levels. All right, y'all follow that? Now, watch this. Remember I told you banks like to buy and sell on threes? We're going to get off this 3 month and we're going to go to a monthly time frame. I want you guys to look at this. This looks so beautiful. Remember I told you about resistance? Once we broke this resistance, everybody should have been in nothing but what?
Calls.
Calls. Got it? Nothing but calls. All right, nothing but calls. Got it? Nothing but calls. All right, now let's rock on the weekly time frame, right? Wish got a lot of questions. Let's answer these questions for him.
I'm here.
All right, let's go. Remember I told you banks like to buy and banks like to what? Sell on threes. You follow me? What y'all see on a weekly time frame? Tell me what y'all see. We got a 3-2. We had a 2-3. Now we got a 2-3-2. So guess what this telling us, ladies and gentlemen? Amazon is at all-time high. What happens when stocks usually hit all-time highs, ladies and gentlemen?
Come right back down.
They come right back down. So what should be your entry? 232. But what happened in the after hour, y'all? Can anybody tell? They got what? Smoke. Smithereens. Y'all follow me? Now, pay close attention on how they like to play the game. We went all the way down to 221. Fell 2 down. What did they go back up to? 231. That's a 10-point move. So guess what happened, ladies and gentlemen? Banks sold off. Some of the banks came in and said, we're going to buy 1 million shares at a discount, and then we're going to sell the same shares here for $10 profit. So 1 million shares times $10, you just made 10 what? $1 million.
Million.
The game is to sell shares, ladies and gentlemen. The game is to sell shares because you can trade shares after hour and pre-market. Got it? Now, let's say you wanted to trade this with this morning, right? 90-minute time frame. We'll say, I want to trade this. You notice anything on a 90-minute time frame? It was trade what? 8:30, right? We should have been in no calls for Amazon today. You got it? Y'all follow me? Because guess what? 7 o'clock, 8:30. Did we ever go above? Pretty much. Did we ever go a body candlestick above the 8:30 candle?
Nope.
Nope.
Or previous day.
So guess what we was waiting on? They was waiting on the earnings what? Report. Got it? All right. Now, ELF. We didn't trade ELF, but I had my eyes on ELF. ELF did the same thing Amazon did, ladies and gentlemen. Y'all see it? Ain't sold on the 3. Y'all see that complete collapse from 89, ladies and gentlemen, all the way down to what? 65. A 30-point drop. So guess what we're going to be looking forward to tomorrow, ladies and gentlemen? Even though they missed earnings, we're going to be trying to play the what? Reaction. They missed EPS, but they beat what? Revenue. So how we going to play this reaction? You ready, Wish? We get our fib, but we draw it coming up. Guess, ladies and gentlemen, I'm not waiting on a 50% fib. I'm waiting on us to break above what? 71.54. I'm going in. Y'all got it? We're going to set the alert now. I'm going in. Got it? Once we break above
how did you come up with that number, that 71
Fibonacci retracement? So what I did is I grabbed my fib over here to the left, fib retracement. I draw from the bottom going up because we're doing calls. And then now we got my levels. So once it break the fib number of 23, 71.66, I'm taking what? Calls. And then what's my target? 75, 77, 80, 84. So same day contracts, right? It moves $6 on the average to ATR. So if I get in at 71, I know $75 and $80 should be my what? Strike price for Lotto Friday. But now if I'm looking to swing it out a little bit longer, I can get $100 or $90 calls for a month out. Got it?
Been there before.
Now, look at this. You ready, Wiz? Look on a monthly time frame, y'all. Y'all notice anything? Now, why in the hell did somebody think they was going to beat earnings? Why?
They're not paying attention.
They've been getting, remember I told you banks like to sell on what?
Threes.
They've sold on 3s. Did they ever come back in?
Nope.
But did the banks buy on the 3 here? Yes.
Yeah.
Bought on the 3, went back to what? Resistance. They've been in a downtrend since 221.83. So guess what? I do like ELF as a company. So guess what I'm gonna be doing tomorrow is buying what?
Calls.
Long term shares.
Yeah.
Okay.
Double bottom right there too.
What's this previous support? But they missed earnings. They all the way back down to what? 66. So why would I not buy at 66? If I liked it at 220, I should love it at $66 a share, ladies and gentlemen. If you guys are following me on YouTube at Empowerment Asset, we are going over what makes sense in the stock market. What makes sense? Simplicity, ladies and gentlemen. We don't have to have our screen marked up with all the things that don't matter, because my thing is I know a lot of people that chart and don't take trades. So there's no point of charting all that up if you ain't gonna take the trade. Now, this is an opportunity, right? We know ELF sells makeup, right? Cosmetics, right? Y'all follow me? So who's gonna buy the cosmetics? Money is coming out of your household. Money is coming out of somebody's household. So I like
My girlfriend gonna buy it.
So guess what? Once pre-market and the market opens, I'm buying what? Shares. Got it? Shares, right? And I'm going to stay in it for what? 5 to 10 years. All right, Affirm. Let's talk about Affirm, and then we'll cover SPY, ladies and gentlemen. Let's talk about Affirm. Affirm had earnings after the bill, ladies and gentlemen, or before the bill. Let's see what Affirm did. Affirm did what? Affirm did pretty good, ladies and gentlemen. If y'all don't pay close attention, Affirm did good. They beat EPS. And it be revenue. I want you guys to look at this on a 3-month time frame. Who used the firm before? Don't be ashamed. I used it before. I ain't gonna get in my bag when I can pay them in what? Payment.
Okay.
Come on now. You gonna give them $3,000 when you can pay payment? Come on, keep your bread and put it in the market. All right, and it's just a credit card. All right, y'all see Affirm? People was giggling and laughing. Affirm is not gonna last. Is you crazy? The world in America is built off of what? Debt.
Credit.
So if you ain't got,
some move.
look at this. A fern dropped all the way down to $8.62, ladies and gentlemen. $8.62. Now, what did I tell you? Banks like to sell on threes and what? Buy on threes. You see, when the banks came in, had $21. They were so secretive, right? And they took it all the way back to what? 73. Bag drop. This is how you make money long term, ladies and gentlemen. You have to get in where you what? Fit in. Now, if a firm continue to keep on climbing, we got what? Resistance at 102. But I want to show you guys something. I know you just asked me about wick theory, right? Everybody keep asking me, what is wick theory, right? So it's a little concept that I came up with that I've just been trading with for a couple of months or over a couple of months now. Y'all see this wick theory here? Y'all see this? Y'all see this wick theory? So what do y'all think this means? There's no buying. It's not but what? Selling.
Sellers.
So guess what? Buyers never came back what? In.
Came back in.
So why would you be buying it?
You shouldn't.
You think you could beat Vanguard? You think you could beat BlackRock and State Street? So why would you be buying when we hit 176 and we came from 176 y'all to $8.62? Come on now. A firm, I wouldn't say it's the best company in the world, but you can make money. It's opportunity, right? If you're opportunity, this is how you make money. Got it? Now let's talk wheels. Let's talk about SPY because everybody online pretty much trade SPY. Y'all ready?
Yes, sir.
All right, let's talk about SPY. Now, everybody always talking about bag drop. All right, let's keep it a buck. In the pandemic, what happened? Everybody got their stimulus check. How much was SPY share? $204. What's SPY now? 606.
So,
Everybody was buying Louis, right? This is what I'm trying to get people to understand. Everybody buying Louis and SPY has been up on an uptrend, right? You could have bought the stock and your stock would have paid for your what? Your Louis. All right, so this is the game. Follow me on YouTube. We live, baby. We live. We just talking about charts and making it make sense, ladies and gentlemen. We got to make it make sense. I know a lot of this go over people's head, but I want you guys to see this, right? We're going to chart SPY on the weekly, and we're going to drop it all the way down to the 15 minutes. Follow me, ladies and gentlemen. Let's tick, 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 right? I know everybody got a short attention span if they ain't watching things that they enjoy, but my whole thing is you might be missing a boatload of information, and it's free. Got it? Let's go. I told y'all banks like to buy on threes, sell on threes. If you go all the way over to the left, the banks bought in November on 3, right? What price did they buy in at? 566. What did they take it to when they started selling? Look right here. What's the price?
Can't read it.
606. So the banks bought in at 566, and then they stole at 606. Y'all following the game?
Yes, sir.
All right, now look on the daily time frame. Y'all notice anything? What y'all notice? We've been in an uptrend for what? Forever.
For a while now.
What we have on a daily today, y'all? What? A hammer. Can anybody explain to me what is a hammer? It's a bullish what?
That's wick theory. I'm lost. It's probably a bullish indicator.
It's a bullish indicator. So my thing is when you see bullish indicator, you should be taking full advantage of it. Y'all got it? Now, I want to talk about something. I know you guys might go over your head, but y'all see this fail 2 up right here on the 24th of January?
Say that one more time.
Y'all see this fail 2 up at 610.78? We literally fell at 610.78. We came all the way down to what? 994. And we went back up, and then we came all the way back down to what? 590. Do y'all see how they playing games? So guess what I'm trying to explain to you guys? Let's count the days. All ready? 1 day, 2 days. So guess what? If we're going to be doing same day contracts, right, we should be buying what? 2 days. Because we're looking to get out in the same what? Same day. By the time. Y'all got it? This is how you do it. Y'all ready? 12-hour time frame. Y'all notice anything? Same thing. But if we drop it down to the 90-minute, let's get paid. I want you guys to look at this 90-minute. Let's get paid. I'm going to delete everything off of here. Load the boat. Get that up off here. Let's go, Wiz. You ready? Talk to him, Wiz. All right. Wiz said he want to know what's going on. Let's go. What time did it say? 1 o'clock? What time did it say? 7? What time did it say, Wiz? 8:30?
8:30.
All right. So what this mean, Wiz? This is 8:30. We should take calls above here, right?
Yes, sir.
That's on a 90-minute. We say, oh, it ain't going to move too much, right? But guess what? What candle is this? It's the 830. We should be taking puts below what? It's 830. So we should take puts below what, Wiz?
I can't see the
60
numbers on the side, too small.
605. And what happened, Wiz? We went all the way down to what? 602, 63.
That's a bad draw.
Yeah, I was in it to win it. All right, here we go. Y'all ready? We're going to mark this up. Calls and puts. The put counter is going to be red. The call counter is going to be yellow. All right. Red, calls. All right. Y'all ready? Let's get it. 15-minute time frame. Let's rock. Y'all see what's going on here? We consolidated and then we finally what? Broke. Look at the time. 2 o'clock, 2:15, and we completely what? Crashed out. I got a question for y'all. Once we broke back above our put entry, we should have been back into what? Call. Y'all ready for this? Let me know if y'all ready for
I got
this.
a situation. From what I'm looking at, the calls never really broke through much, like the puts did.
All right, now
How
pay
do you?
close attention. All right, this changes. Right? Once we get this put entry, right? You see this put entry here?
Mm-hmm.
All right, this is our call entry off the 90-minute, right? But guess what? Everything changes because we was able to get in the trade below the what? Put entry. You ready?
Right.
So now our put entry turns into our what?
Okay, our call entry. I see what you're saying.
All right,
I
you
get
ready?
it now.
Complete drop, $3 move, right? Once we broke above the call, look what we broke at 605. We went all the way back to what? 606.
Mm-hmm.
Before the market closed. Y'all ready for this? This is how they got people. What is this right here, y'all?
Pump fake.
Wick theory after the bill. So guess what this means? They say, hey, we got an opportunity. We can trend what? Tomorrow. So we hit this wick theory at 603, and then where we at right now? 605.98, baby. Ooh wee. Y'all following the game that they playing on y'all? This the game. Now, let's talk in the strat world. So people say, oh, you got multiple trades on here. You see this fail 2 down? Let me know if y'all see that. This is a fail 2 down. Y'all got it? Fail 2 down if you guys follow me on YouTube. This is a fail 2 down, ladies and gentlemen. You guys are following me on YouTube. Fail 2 down. Let me know. Drop a world emoji in the chat, ladies and gentlemen. Drop a world emoji in the chat. Drop it in there. Drop it in there. I'm waiting, ladies and gentlemen. Show some love. Show some love. Follow me on TikTok, Empowerment Assets. Follow me on YouTube, Empowerment Assets. Let's rock. All right, y'all ready for this? Seems simple, right? But everybody missed it. What time this counts? It's 2:30. Fail 2 down. You ready, Wiz?
Yeah.
If you're using Fibonacci retracements, let's go. I want Wiz to see this. I don't want you to miss no money. All right. Draw our fib, come back up to the top of this. What should be your entry going back up, Wiz? If we
I can't see the numbers on the side. They're too small.
All right, look in the middle. Let's go. Look on the middle. Let's see. Let's see. We're gonna call it out for you. What's the 50%, y'all? 603 what? 60. Got it? Wiz, you should have been back into this play when it broke above. Backdrop.
Okay.
All right. I do you one even better, right? I trade 3 candlesticks, right? Not the numbers. You ready? Fell 2 down, inside candle. Once this third candlestick came out above this body, I'm taking what? Pause. What is my strike? Right here. 605, 604. So I got in at 603.73, 604, 605. And guess what? We went to the what? To the moon. My first exit is where? 50 cent in here. My second exit is where? Here. Bag drop. Y'all got that? Bag drop. We just trade in numbers, ladies and gentlemen. We trade in pattern. We trade in sequences. Y'all follow me? That's what it's about. All right, now if I'm just trading off the 90-minute, ladies and gentlemen, this is how I would trade it. If I'm just trading off the 90-minute. Today was a chop fest on a 90-minute, right? But now, let's type in a stock. Can anybody tell me what else did we trade today as a group that we bagged up off of? That was an opportunity. Put it in the chat. What else we trade today? So many plays. What else we trade? I'm waiting. Go ahead and look, ladies and gentlemen. I'm waiting. What else did we trade? that went pretty well for us today.
Was it pins?
Yeah, let's talk about it.
Interest?
Let's talk about Pinterest, ladies and gentlemen. Anybody that's shopping food, man. Let's talk about this. Gonna be a bag drop. Oh my God. Look on the 3-month time frame. What y'all see? Double inside. Some gotta what? Some gotta give. Right? Consolidation on a double inside, ladies and gentlemen. We broke up. They got earnings. That was our what? Catalyst, right? What happened in earnings, ladies and gentlemen? Did they beat revenue? Yes, but EPS failed. But guess what? The forward guidance said, hey, Pinterest is in an uptrend because they're making a lot of money off of traction. And what? Advertisement. So what's our target? You ready? Court? Double inside. Top of this candle, right? Top of this what? Boom. What we hit after hour? Can anybody pull it up? What did Pinterest hit? Talk to me, y'all. What did Pinterest hit? Oh my God, it's gonna be a bag dropper. We stay up. What did Pinterest hit after hour? What was they high? I'm waiting. Y'all gotta do a little bit of research. Coach can't do it all. What Pinterest hit? Go to Robinhood. What Pinterest hit? What was they high after the bill? This is gonna be beautiful.
It was, they went to a high of $43 on the dot.
$43 on the dot. So was our target trajectory on the right? Here we go. You ready? Did we hit it? Yes or no? Boom. So if we keep rising, we're gonna take out this 3 and this what? And this 2. Y'all see how the game? Price halves what? Memory. This is gonna be a beautiful trade, ladies and gentlemen. That is a crazy, crazy candle. Banks like to buy on 3s and sell on what?
3s.
3s. They bought where? What they bought Thursday. At what time did the banks buy, y'all? This is funny. This is hilarious. What time did they buy? 2 what? 2:30. Why would they come in and buy shares at 2:30 if they don't think that it's gonna be what? If they don't think it's gonna be what? Earnings. Why would they come in and buy? They came in and bought 2 3s back to back. Whoop, bag drop. Y'all got it? This is the market. Now, let's talk about a few other things before we head off here, ladies and gentlemen. If you guys have questions, put it in the chat on Instagram. If you guys have questions, put it in the chat on YouTube. I'm always available. You can DM me. I'm available during market hours, anytime before the market, 8:30 and to 4 p.m., right? My thing is, if you guys are looking to be coached and learn different ways to actually maneuver in the market, we can do so as a team. But remember, ladies and gentlemen, it's all about you being what? Positive, right? Because if you're not positive, ladies and gentlemen, you're not going to be a winner. I'm just keeping it honest with you. Don't be the person that think that you know it all. I don't know it all, but I know a little about a lot. Y'all follow me? A little about a lot. All right, let's talk about this, ladies and gentlemen. I'm going to put this flow on, and hopefully everybody can actually lock in with this flow. So I think this flow is very important. Anybody ever traded flow? Anybody ever traded flow? Right? Flow is an opportunity for you to trade, ladies and gentlemen, as an opportunity for you to see banks, big orders, big buys. Let's talk about this flow, ladies and gentlemen. I'm going to present, and I want you guys to look at this flow. All right. For everybody that's joining me, this is flow, or you can see who's buying and who's selling. I want you guys to look at the, we're going to look at the call side, and we're going to type in pins, PINS. All right. You guys notice anything on pins? Talk to me, y'all. Y'all guys know anything on pin? What you guys see? Money. Y'all see all that money coming in on pins? Let me know if you guys see that money. See the money? So if they came in and bought strike price $37 on pins for expiration date tomorrow at 3:59 p.m. 3:59 p.m. They put in $10,000 order, 358, $28,000 order, 358, 28,000, 358, $76,000. Do y'all see all this money? 350, $259,000 order. Do y'all see them orders? What's this telling y'all? If y'all see all this order coming in, they think it's going to the upper what? The upper room. Y'all follow me? So this is how you look at flow. That's part of the game, ladies and gentlemen. So for everybody that's following me on IG, I'm out. Peace. Everybody that's on side Google Meets is open for questions. All right. Rock and roll, ladies and gentlemen. You open for questions. Everybody that's following me on YouTube, ladies and gentlemen, I hope you guys enjoy your night. I'm out. Peace. Google Meets, let's rock and roll. What's y'all questions, ladies and gentlemen?